The Federal Reserve at its December meeting was at or near the point after cutting by a quarter of slowing its policy easing. The rate cut that they did enact was seen as, quote, finely balanced. It was a finely balanced call, and some wanted to not cut at all. That is more than just the one dissent. Not everybody has the vote. So why did the Fed cut? The minutes say that the Fed cut rates to maintain the strength of the economy and the labor market while continuing progress on inflation because they believed they were restrictive. The risk between inflation and unemployment were seen as roughly balanced. Inflation had eased substantially, though it remained somewhat elevated. What you're going to hear next is a lot of the back and forth at the meeting between those most concerned about inflation and those less concerned. So the pace of disinflation had slowed, some said, with recent readings higher than anticipated. Upside risk to inflation had increased. Several were concerned that disinflation may have stalled or risked stalling. On the other side, some people said disinflation was still apparent across the board, especially in market prices as opposed to the non-market prices on a range of goods and services.